Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
All right, guys, I should be fixed now. You should be able to get some audio from me now. Let me know if you guys are picking me up on the chat. Let me know. I'll definitely check in here. We got sound? There you go. We got it, guys. Just had to deal with a little bit of OBS action here, but I want to introduce the show. Today we're going to talk about Levi's. We got TLRY, General Motors, Affirm, Peter Tuchman, Ticker Time. We'll talk a little bit about Tesla's Investors Day. There's a lot of action going on. Market bouncing back, Dennis. How's your morning starting first?
Yeah, I haven't really determined yet. I'm not getting slaughtered, but I'm not doing great either. So we know I trade market neutral. You got the overnight positions. A few of my longs are not keeping up with SPY, though. So that's SPY and the Qs. Tech stocks are ripping. If you're loaded up with tech stocks, you're doing pretty good this morning. If you got other stocks, you're like, there's some rotation here because you're seeing oil trading down here this morning. A lot of the oil stocks are down. You're seeing a few other stocks just not keeping up with SPY. Tech is definitely the strongest. If you go to the QQQs, you can clearly see the tech is blasting off. I mean, this is an impressive less than 24-hour rally. We started rallying at 1 o'clock in the afternoon yesterday, and we have not stopped since. Again, we are just Groundhog Day here. We get down to that bottom of the range, and then they rip it higher. But you know what? This time we blew through the top of the range. The overnight traders, we closed at the top of the range, and then we blew through it. And believe it or not, we've been talking about this weak market for about a month, the entire month of September. In one trading day, not even 24 hours, since 1 o'clock yesterday, we have almost got a 50% retracement of the entire move on SPY. That is awesomely impressive. How I'm calculating that? 454, the high back on September 2nd. The low just from 3 days ago, 426. So you got about 28 points there. Well, if you take half that 14 off the 426, you get up to 440, and lo and behold, that's where we were almost got to this morning. So you're almost at a 50% retracement in one day. So getting back half of last month's losses on the SPY in one day, this market is nothing short of impressive. I'm still going to say Spencer Israel's going to be right, and we're going to make new highs by the end of the year. But I'm also going to say, if you're buying it now, what are you doing, Mitch? You're buying it now, today.
Hey,
you are doing
it. Doing it wrong, man.
You're doing it backwards. You're doing it backwards. But we buy dips and sell rips, and what a rip it has been. We were the low yesterday, 427. We were up 120 S&P handles in less than 24 hours. That is a hell of a rip.
Yeah, it's a tough one. I drew a circle there right where the 50% retracement would hit, and drew the fibs from the top there, and we'll see if we can get through that level. It's right near 440.25, so that's kind of the level that I would look for to get it above today. We'll see if we can get through that level, but I mean, a lot of times when we've been seeing this pre-market action in one direction, it's kind of worrisome to get it to the open. What's going to happen? Do we get a washout back to support, or do we get another rip up? We'll see what happens in the overall market and see what we can continue. Now, one thing I will say is the tech definitely looked strong. Really nice bounce there. I really like how it's holding this upward trend. You know, if you can draw that trend line going up, you could see last time we went through it here in June 19th, we ripped off that. We actually made a 20% move from that, about 19.68. And now we're looking to see if we can get back up there to 370s. That's the level that I'm looking at to see if we can get back up and start testing to get back to all-time highs. We'll see what happens in the Qs. Let's go ahead and let's get into Levi here. So want to go ahead and start getting into our topics of the day. Levi actually earnings beat here, guidance raise, and a buyback. Let me go ahead up and pull up Levi here.
lots of good stuff being said on Levi. It had low expectations coming in. The stock actually made a new low on the move the day, hours before it was due to report. So low bar beats a low bar. There's still an ugly, ugly, ugly downtrend. Can it break that downtrend today? Maybe. I would say you got massive resistance up at 26 though. So I don't see much of a trade here other than if I was long, I'd probably be selling it up into the higher 25s.
We'll see.
Next, we'll fly through these topics.
All right. Let's do it. Let's go to the next one here. I'm willing with that one. Let's go ahead. Let's get into the next one. Next one up is going to be TLRY. This one's interesting because it dropped after earnings, but I know that there's some people keeping a close eye because, I mean, you've been hearing talks in Congress. Each time it does that, it pops up for a little bit, but faded back down. Today, traded a little bit down on that news, starting to come back. And we'll see what happens here with TLRY. I'll pull up the earnings. What are you thinking, Dennis, about the cannabis industry here?
Okay, so earnings were in line, sales missed. It wasn't a great number. It's being helped out by a really strong tape today here, and people are looking at buying dips on everything. So anything that's dipping after, you've got such a strong move, people are like, okay, I need to get some capital employed. I'll buy the TLRY dip just because I need to buy some stocks. I mean, we're oversold. We've been talking about the cannabis stocks being oversold for a long time. From a valuation perspective, I'm going to own none of them because they're all still expensive. But from a technical perspective, these stocks are oversold. Look at Alibaba. We'll bring it back over to that. I know it's not on your schedule, but I'm going to take it to the tangent because we talked about it 2 days ago being massively oversold. And we even set up a trade for you yesterday saying if you wanted to take a flyer, and I liked the Alibaba pullback yesterday morning, it was down $2. And I said, you've got the level to lean on. It's 138.43. Well, you know what? Yesterday's low, 139.96, $1.50. You would only had to take, not that necessarily that you would have got the absolute low, but 140, 141. You're risking a couple bucks to get that potential pop. And we talked about one of these days it's going to have a 10-point bounce. Well, it just did. It just had a 10-point bounce from the lows yesterday up to today. So there it is. Alibaba oversold, starting to show some life. I still like the Alibaba. I'm still long in the long-term portfolio. I'm not going to buy it when it's up 10 points in one day, though. But you get a pullback here, 145-ish, starts to look interesting again. So I am buying dips. I'm always buying dips, but I'm looking more actively here. I tried to buy a couple stocks yesterday in the longer-term portfolio. I can't even remember what I was buying. I was nibbling in a few things. Like we know I bought Cleveland Cliffs a while ago. It got really whacked yesterday. He had Goldman with some commentary on Cliffs, but he also had some comments on U.S. Steel. So there is opportunities here in individual stocks when they get these dips, but at the same time, you want to be looking at the trends. You want to be looking at a lot of other things as well. Taking it back to TLRY, Cannabis way oversold. TLRY way oversold. Could you have a relief pop to 12? You could, but the trend is just not your friend here, and there's so much overhead supply. Do I think this thing's ripping to $14, $15? I don't think you're going to see that much of a pop, but it has been pretty easy on the shorts here for the last few months, so I would be surprised if you could squeeze them up to 12. I don't know if I'm playing it, though.
Yeah, at least I might try to play TLRY if I hear some news more, but not really on earnings. I'm really just paying attention to government news. Macro news is going to be the big thing for cannabis, I think, in 2022. I'm looking for deregulation. So for right now, hands off for me on TLRY. And also for me, Dennis, I'm still hands off on Baba. I know that you've been seeing that. And for traders, you have a level to lean on. So definitely you can focus on that. But for me, a lot of times I have to get away from the market for 2 to 3 hours. And it's just not something that I want to hold right now with all the concern in China. But to, like always, just do your own risk analysis there, and Baba bouncing back there 10 points. I mean, that's a big move there. All right, let's keep going. Let's get into the next one. I'm sure that a lot of people wanted to talk about this one. GM provides a motor electric vehicle update. Let me go ahead and pull up the chart here. See if we're finally getting some reaction. Because yesterday, I mean, we really didn't get reaction from the news, but looks like we're starting to come up here in the pre-market. That's kind of that window space that you see there. And so pretty much from what came out was that GM hopes its efforts will boost operating margins to 12% and 14% by 2030. from 7.9% last year. Annual revenues is expected to double to 280 billion from a 5-year average of 140 billion. So really, I mean, this was really, I think, a call out that, hey, we're going after you, Tesla. And it looks like GM not doing too bad in the pre-market. What are you thinking, Dennis?
It's lifting. I mean, you've got some overhead supply here to double top of 55.5. So there is some work to do to try to get back through 55. And we did fall off. We have had a pretty good rally here. We know I'm long GM in the long-term portfolio. I still believe in the story. I still believe GM's going to be a major player in EV. But it's had a pretty good run here. You've got a 50% retracement of the overall move. I think you're going to run into resistance, and you got some work to do in this 55 area. So I'm not just jumping in GM. If I had it on for a short-term trade, I would probably sell it here, to be honest. Completely talking against my long-term buck. But it's not on for a long-term trade. I believe in the story in GM long-term. So I'm sticking with it for now, but I don't like that 55 level. I think it's got some work to do there. So I think you're opening up into resistance.
All right, now kind of levels that I'd point out on GM. I'd go to the daily. I like this 53.50 on downside. You got multiple closes near 53.49. We'll see if 53.50 can hold today. And on the upside, we want to get through these highs, 55.50. You also got here 55.64. Let's see if we can get through those highs today and really get that breakout in GM. On the downside,
I'm thinking no. I don't think it's got the gas to get through it, but maybe I'm wrong. I just feel like, and let's take it back here. You know, just you always want something to look forward to, and people were looking forward to this Investors Day for a few days. We had talked about it. The stock had kind of run into it. It got lots of attention on CNBC yesterday. The CFO was on CNBC with an interview. I mean, they talked. I mean, it was the talk. You know, it kind of got its like time in the spotlight there. You know, the hard spotlight in the media. It was talked about all day yesterday. So you know, you get the pop, and people are like, "Oh, I saw that GM. I want to buy that." I feel like they're the Johnny come lately. So, like I said, I don't see the catalyst to just drive us through that major resistance. I mean, if we were above the resistance and it was open, but all I see is major resistance. I see a stock's been moving up nicely. It's been a nice move. It's moved up 10% the last month, not even the last 3 weeks. So I just think it needs to take a pause. It needs to take a breather. Do I think GM's going, back to 48? No, but I think it needs a breather.
All right, want to take a second here. Looks like we're getting some questions in the chat. Yes, Spencer Israel is at the doctor right now. Nothing's wrong with him. He's taking the morning off. He'll be back with us later. Joel will also be back with us, taking a good vacation that is well deserved. So we're going to keep going through the stocks. Let's go ahead and get to the next topic here. Sure. We're running through it this morning, so we got a lot to get to. So that's the good thing. Let's go ahead. Let's get towards the next one. We want to talk about Affirm here. Affirm is really interesting. It ripped, and I'm sure Spencer was looking at this like, oh man, shouldn't have got that stop out. But really, I mean, I don't think anyone knew this news was coming. But one thing that has been pointing is a increase in retailers, right? Affirm went first with that Amazon, now going to Target here as they rip higher after a deal with Target being announced yesterday, and really getting an immediate lift here. Right?
Is this going to pop 20% every time they announce a deal with a major retailer? That's what I want to know.
That's what I'm wondering, because I think you and I both want to trade that if it's going to happen.
Wasn't the last one Walmart? So when we had the big pop from, when was it? I'm probably looking at the chart. It was probably the gap up from like 88 to like 121 that one day. Wasn't that Walmart? Yeah. So now they come with the big, with Target.
They're going to keep
the next
going.
one? Going to be Costco, and then we're going to get another 20%. So eventually these moves are going to start to be more muted, from these big deals. We saw this with Beyond Meat, not saying Affirm, not comparing it to Beyond Meat, but I'm comparing that type of news where every time Beyond Meat would get a new deal, it popped 20%. Every time we get a new deal, it popped 20%. Well, eventually it wasn't popping at all on the McDonald's deals, because investors like, oh, it's just another deal. So, it was Amazon. Sorry, it wasn't Walmart. It was Amazon.
Yeah.
So that big one there. But I mean, okay, you get the big deal with Target. I think the pop was ridiculously overdone. But I'll tell you one thing: I never short a stock making a new all-time high. And it's been a good move for Affirm here. It's a stock that's massively in favor. It's the kind of stock you want to be buying dips on. I'm not buying up 20 points on a deal with Target though.
No, I'll be looking for pullbacks closer towards 126.50 out the gates. We'll see if it can come back towards the support.
Patience.
That's actually a prior breakdown spot. If you look at the pattern that was between the 24th through the 28th, that's where it broke down and held support multiple times. We'll see if it holds there again. With Affirm, you just mentioned Dennis. I'm going to be looking for that Walmart news now. We got Target, we got Amazon. Why not Walmart, right?
Well, that's it. So, I mean, and that'll be the last one. But again, when it's hard to be short of stock if it's going to pop on, because there'll be no more deals. There's going to be a lot more deals for Affirm coming. So they're just not going to keep popping them 20% on every deal. I think it's overdone. I think it was an overdone move. I wouldn't be chasing this move. I don't think it's going 150 today. I think you're probably going to see, and we have some precedents. I mean, after the Amazon deal, it came back down after that as well. And we are in the market where patience pays. And what does that mean? Don't chase. You don't need to chase in this market. It's not the market's just blasting off into orbit and leaving you behind. It seems like it always gives you another chance. Just like in GM, gives you another chance. You know, if you're chasing stocks in this market, you're absolutely doing it backwards. It has been a contrarian market for the better part of 9 months, and that continues to be the case. Palantir, great example from 2 days ago. I tweeted out when it was at 26.5 that, you know, these are pops that are to be sold when you're getting these news pops, because this is the type of market where selling the rip has been working very, very well. And it didn't even take 1 day, and Palantir gave it all back yesterday. Yes, it's up still 30 or 40 cents, but it was up like 15%. And if you're paying up 15% on a stock on a headline, you're the one that is transferring your money to the professional traders, or to the traders that are actually, you know, listening and actually using the information and selling the rip. So don't buy the rip, sell the rip. That's not investment advice, not trading advice. That's how I do it. That's how I'm consistent. And you know what? In some market environments, it pays to hold on. And sometimes I'm out too early. But in this market environment, the contrarian has been winning.
Yeah,
Somebody said Affirm already got the deal with Walmart. So I knew there was a deal in Walmart with there somewhere.
there was.
So
I haven't heard with Walmart. I have heard the Amazon.
I don't know
That's
if that's
why
right,
I mentioned
but somebody
Amazon.
in the chat just said that.
But
I feel like there was one with Walmart too. I feel like we know Amazon, Walmart, Target.
we'll
So
definitely have to
that's
check
big
it
three.
out.
So
Well,
what's the next catalyst then? If you got the big three already, Costco, I don't know. So,
keep it going, right? I mean,
you're not gonna keep getting 20-point pops on every time we get a deal.
yeah, that is true. I mean, I think it's been a little bit excessive on the moves, but one thing to keep in mind is if you had, you know, Benzinga Pro, you probably can get to the news quick. This is a quick kind of trade. When the news comes out, as you guys can see, let's go back to Affirm here. You can see in 1, 2, 3, 4 hours, it was already up there. So this one, I think they released the news right at 9:30 too. Did you see that, Dennis? I didn't see the news earlier. They did one of those right at the bell kind of releases. I know Benzinga Pro picked it up at 9:41. I'm pretty sure this was released at 9:30, right out the gates.
And that's the one thing on some of these headlines, especially when they break during the day. Sometimes it does take a few minutes to digest that because it's thicker, there's liquidity out there. And then you know what happens? They talk about it on CNBC all day. They talk about it on, you know, Bloomberg. They talk about it on Benzinga. They talk about it everywhere. So as they continue to talk about it, people are like, oh, I want to go buy that. You know, media drives price. We talk about analysts driving price. Media drives price as well. You know, why does it work? That, you know, the alpha that I always talk about extracting about the run up into an event. Why do you think that run up really occurs? Because the media is going to be talking about the Apple event coming up, and what that does is it drives retail traders into the stock because they say, oh yeah, I want to buy that retail event's coming up. And then, you know, obviously the stock continues up. So that's really what drives it is media mentions. And you've got to, if you can anticipate the media, get ahead of the media mentions, you can make a lot of money in this market as well from a short-term trading basis and a medium-term trading basis. Not so much a long-term trading basis because the media is usually a topping event. But, you know, that can actually help you too. You know, like often I say, you know, when everybody's talking about stock and social media, when they start talking about it on CNBC, sometimes it's time to ring the register. We talk with Chris Camilo from Dumb Money, and that's what he talks about is the same thing. You know, he reads social media and he says what's getting hot. He likes to move into those stocks. When they start talking about it in mainstream media, that's where he calls information parity, where everybody knows about it now, and that's the time to get the hell out.
Yeah, that's a crowded trade that we saw happen also in CEI. I think that's kind of a perfect example. Also, everyone all through this period, yeah, it's all over social media, social media.
Yeah.
Boom. Then you start seeing it on all the media sites on this last little push. Then boom, it starts to break down. It's just it happens often, especially with these big, cheaper names that make massive runs, right?
Well, there's one
Parabolic
happening
moves.
right now. Then chat's talking about is BBIG, and I have no idea what's going on with BBIG. It's
Perfect
up
example.
22% here this morning. It's probably somebody has mentioned it in social media. It's, there's probably some, not that they're promoters. I don't know, who's talking it, but I guarantee it's probably being mentioned by some of these people who have massive followings in social media. These have been selling opportunities. So I'm going to say it again on BBIG. If you're stuck in this thing, you bought it at 10 or 11 or 12, I don't think you're getting your money back. I think you're cutting your loss when you can. I think you're using rallies to get out because I believe BBIG, and I don't know anything about the company individual, but I'd say it seems like the majority of these stocks that have these huge moves from 2 to 12 eventually come back to where they were once that everybody, is basically, in. So, I mean, you got to watch these promoted stocks in social media. And this is something Gensler is going to crack down on, and he rightfully should. When you have, people coming and they're promoting stocks, they're buying huge positions and then promoting them on social media. And then, obviously, what happens is they get the buzz and everything gets going and, it hits Reddit. Everybody's talking about it. And then, you know what? Everybody's already in. And then it starts to leak and leak and leak and leak and leak and leak. And before you know it, you got a CEI. Well, CEI was a sudden one because a short seller attacked that one. So that wasn't a good example. But there's a lot of these other ones. AHT was one that everybody was talking about in social media. Some of these short squeeze stocks like Bed Bath & Beyond was one, and it's come back down. So what I want to tell you is if you're sticking these in your long-term account, the majority of them are going to lose you money. If you want to trade the momentum, trade the momentum. When the trend starts breaking, you've got to get out. You've got to get out once the momentum turns because there'll be a lot of people caught. They're crowded trades very quickly, and all those people will be looking for exits eventually. So this BBIG trend absolutely broken here now. It looks to me like, it eventually wants to go back down to $2. That's just technicals. I don't know anything about the company's fundamentals. Maybe there's something good going to happen here, but I would use all strength to get out if I had BBIG.
All right. Well, I have the news here for us. It was actually looks like we got an acquisition here. Vinico Ventures shares.
That's a headline.
Are trading higher after the company and Zash Global reported the purchase of AdRiser for $108 million in cash and stock. So it looks like there is an acquisition here with
the BBIG is buying somebody.
Yeah. So
the headline that broke at 8 o'clock, that's why it's lifting. Is this thing bringing it back to $10 or $11? I don't think so. Yeah. I don't know anything about any of those companies, though. I'm just reading off the technicals and saying you got a lot of people stuck in this stock.
All right, definitely. Let's go ahead. Let's take a look. We'll see what happens with this one. I'll keep an eye on it. I want to shift on over before we get to Peter Tuchman. He should be here in about 9 minutes. Let's get into a little bit about Tesla's Investor Day today. Tesla has their Investor Day today. A lot of people are expecting to get some kind of updates. Now, what updates could we get? Let's go ahead and talk a little bit about that. Looks like there's my notes there. All right, let's go ahead. So really, this is going to be some of the things that we're going to be looking at is to hear about the Berlin Gigafactory and will it start producing cars over the next month. The move would also relieve a logistics bottleneck because, of course, Tesla's Model 3 Ys are being produced in China and shipped to Europe. Tesla's new Gigafactory that's being built near Austin is also expected to be completed this year and begin full-scale production in 2022. So we're going to be paying attention to that. Other areas of interest are going to be Tesla's battery technology, China's growth and demand, and the competitive environment. Also, pay attention towards talks of chips. Tesla has been talking that they want to produce their own chip, so you could possibly get an update on that. I know that a lot of people are going to be watching to see what happens with Tesla.
What time is that, Mitch? Do you know?
I'll get you guys the exact time right now. I think it's at nighttime. A lot of times Tesla's investor days are at nighttime, but I'll give you it right now.
Okay, he's going to go find that. I do have a trading position on Tesla, so I'm going to limit my comments.
Oh, it's going to be an interesting one. For me, I was watching it to see if it was going to turn around with the market. Looks like they're going to be holding, last time it was at 1:30 Pacific time, so we're talking 4:30 Eastern. That's probably where it's going to be at today. Yeah, that's what I'm getting at right now. 4:30 Central time, so we're talking 5:30 Eastern. Looks like last year they did it at 4:30. They're going to do it 5:30 Eastern. Looks like there's even already a stream up there for you. I'll give you guys the link. I have it right here from Tesla. So if you guys want to catch that link later, Tesla's shareholder meeting starts live in 9 hours, starts at 5:30 Eastern. We'll keep watching to see what happens with Tesla. It's been fighting that $800 level. We got one peak above that. Can we get above 800 today? It's going to be interesting. That's probably what I would be watching. With the market going up and EVs kind of getting a little bit of a lift, GM news, I'll be paying attention to this one. It's definitely going to be on a lot of traders' radars. All right. Any important stock that you guys got in the chat, definitely mention it. I want to catch news that you guys see out there just in case we're missing any headlines. Now, one that I did want to talk to you about, Dennis, is Roku. Roku's been really pushing in Canada. It was said that they have 41% of TV streaming, of people that have added TV streaming in the last 12 months.
I have two Rokus.
Yeah, I was talking
TV.
about it with Joel, that you had to. So, have you heard any talk? How's Roku in Canada?
I love the Roku. I love using my Roku. I mean, it's the cheapest way to stream if you don't have a smart TV. Obviously, I have a smart TV. Maybe you don't need the Roku device, but on some of my older TVs that don't have the smart capabilities, I mean, it works fantastically. It's $40. I go and I boom, and I got everything on there. And even the Roku channel actually has got a little bit of content on there as well. So I love the product. I hate the valuation. So that's why, I haven't put this in the long-term portfolio. But what I will say is he had a little bit of the Alibaba trade. Roku massively oversold. And what it was yesterday was some of these stocks that were massively oversold had relief pops. And that's what Roku had yesterday, a nice relief pop. There's room to that high, I would say, the move 339. Then you're going to start to get running into resistance up from 339 to 350. So there might be another 10 points in here. But after that, it starts to get tough. And the stock's in a clear downtrend. I don't think that trend's breaking. I think the Roku's hot story has cooled off significantly. And valuation is starting to matter. And that's why you're seeing the price start to come in. So I don't like it long term. Short term, there it's had the move. If you were to ask me yesterday, I would have said it's oversold and due for a relief pop. It's exactly what happened. I have no position in it. I don't intend to have a position in it either.
All right, we'll see what happens with Roku. Last time, Dennis, I actually got caught in that analyst pop. I didn't sell out and ended up break even on the trade, even though I got an overnight gift. A lot of the times I've heard Dennis mention that, and I think that it was an overnight gift. The last time it popped towards 340s, it actually got to 339.60. And I had my order to sell at 340s. That's how it goes. Sometimes you just got to take what you got there. I was
don't miss
picky.
A trade. I always say don't miss a trade just to save yourself a couple of cents. If you're in for a swing trade, I hate lifting the offer, hitting the bid, but sometimes you just should. If you're in it short term, don't miss a trade to save yourself a nickel, because those opportunity costs are too significant. So when I want to get in the trade and it's a swing trade, I typically just get myself in. From an execution perspective, if you're small enough, a lot of times you can go 2/3 of the spread. So sometimes you're trading these thinner names, even like a Roku, for instance. In the pre-market, it doesn't work as well, but during the regular session, if you've seen Roku like 327 to 327.50, usually if you go 327.35, 40 on the buy side, you're going up 2/3 of the spread. Usually a market maker will hit you. So that's how I kind of, if you're small enough. I mean, if it's 200 by 200, you're trying to buy 1,000, your 1,000 share order will probably push it up. But if you're trying to buy 100 shares, go 2/3 of the spread. Usually you'll get done. That's some execution tactics for you.
Yeah, we'll see what happens with Roku. I like the stock here, always at 300. I've liked it before at 300, back when we were in this time. and then we got that big ramp up. It's definitely a support there. We'll see if it holds 300 from here on out, and Roku can make a move back. With Roku, look for Fubo. I know that one likes to run with it. Look for that one maybe to get a little lift today. Roku's doing well. If I saw Roku doing a day 2 move, I would also pay attention to see if you get Fubo to come back up. And one that has
Fubo been doing? I haven't looked at that chart in a while. No position in it. Oh, you know what? There's lots of lows there, though.
Yeah.
So I actually don't mind the chart. You got lots. You put in a lot of work there at the 23, and then it kind of came out of that area yesterday. So not surprising. It's getting bid up pretty solidly here today, Mitch. 24.70. So I mean, I don't know. Maybe you've missed this trade, but if it's pull back in the low 24s, I find it interesting.
All right. So we had those lows 22.99 the day prior, 23.01. And the day before that at 22.72. So I would look for that 23 to hold on downside. We'll see if Fubo can get back up. One that did take a hard hit in the downturn in the market was Vizio. This is one that I've traded multiple times up towards 27, but it did come back down almost to the IPO low. It went right close to it. We'll see if this one can come back. This is also a company that trades really closely with Roku and Fubo. And we'll see how Vizio done. And continues to move as they've been trying to continue to grow their TV service just like Roku does with that live streaming to give you guys access to live TV for free. And they're going to continue growing. We'll see what happens with these. Next one I want to get into is Rocket Lab. Rocket Lab actually got a contract from NASA here. Let me see if I got the news around here. So they jumped.
Rocket ship?
Yeah, they jumped on selection for NASA's launch. So pretty much they got a launch that's going to be in 2022, but I think it definitely helped the environment here for space. We've been waiting to hear some more launch news. If there's anything that I've seen move these kind of stocks, it's been the launch news, right? So SPCE also, recently got that FAA clearance back to going up. So I've been wondering, when are these rocket stocks going to start moving again, and these space stocks? So I'm wondering if this could start the day and get the lift going.
I don't know. I don't follow the company. It's a nice pop. I think you got massive resistance up at 16, so not a fan. Just be careful. And chat, Mitch might have to take that message down. I see somebody really promoting BBIG. I don't mind if you're mentioning a stock, mentioning that it's ripping, but when you're telling folks to get in quickly, you're going to miss the moonshot. That's promotional. We don't want messages like that. So GM, if you want to talk and mention BBIG, that's fine. That's cool. You know that it's hot, it's moving up, but when you're telling people to get in, you're going to miss the moonshot. That's too promotional for this chat room.
Yeah, definitely. If you're in the chat, I'll definitely get that out, clean it out here.
Mitch usually monitors that, but he's on the show full time here right now. So, we're not, a ticker time promotional show here. So no problem to mention your stock, no problem to give your market opinion, but it's a fact when you're writing a message. Get in now, or you're gonna miss it. I mean, that's promotional. We don't like that stuff on the show.
Yeah, it's just how it is. I mean, at the end of the day, guys, there's no need to push people to get into a stock. If they clearly see it, they will clearly make that decision for themselves.
And sometimes, these handles, I don't know all these handles, but we've had an issue where people are coming in and, you have this issue, Mitch, because we have quite a few people watch the show and people come in trying to push their stocks intentionally. And everybody wants to talk their stock. It's cool. It's your opinion. It's cool. It's when you get multiple messages, buy now, you're going to miss out. I mean, that's where, we don't like that stuff on our show.
All right, so we'll see what happens with Rocket Lab. Another one that I'm keeping an eye out for is SFTW, which is Black Sky now. This is one that I like. This is a play on imaging. Maxar is the competition, the major competitor. I'll see if these can come back, and that will get me interested in Black Sky. Maxar hanging out here at 27.50. Dennis, we've talked about this one before. It might be a level. We've talked about the 30 for it before. It's definitely going sideways, Maxar. We'll see if it can get off of these levels here.
I've been interested in this stock for a long time, Mitch. And you know what? You do have a level here. So we will say I just set up the trades, but look at this 27 level on MaxR. So I don't mind this chart. I'm actually writing it down. I have no position in it, But I mean, these are the types of trades that, are bouncing back here right now. People looking for the diamond in the rough. With that being said, it didn't bounce yesterday, and that is somewhat concerning. Is Peter Tuchman there? We got to go get Peter.
Yeah, let's see if he's here. He should be joining in there. There he is. We got Peter here. Let's go ahead. Let's get towards Peter. You guys know exactly who this is, but if you don't, you need to find out. The one, the only, the Einstein of Wall Street. Let's go ahead and get Peter on here. What's going on, Peter? How we doing?
Hey guys, how you doing? Dennis, Mitch, what's up, guys?
I'm gonna put you in the middle because
long time for me and you. You've been on the show a few times here, but usually Spencer brings you on after 9 o'clock, and I'm gone at 9 o'clock. So I'm glad they scheduled you finally on my show because I love talking to you, Peter.
Awesome, good to see you, Dennis. Hey, Mitch, what's up, guys?
Hey, at least, we're seeing a little bit of a bounce back here. I know Dennis had a question that we were talking a little bit on the pre-market show because we've been paying attention to, Baba, JD, PDD. I mentioned that I saw a block trade today, but Dennis, I'll let you kind of lead the question here.
I was going to say, because I want to ask Peter this, and me and Mitch were talking on the pre-market show. I don't follow block trades anymore. I used to. If I go back 20 years ago when I was doing a lot of tape reading, I still do tape reading. When everything was happening on the exchange, what you would see is, you'd see a big seller in the market, and then they'd be pushing the price down, and then the price would be coming down. Then all of a sudden, you see the mop-up print, the big block go, and okay, well, it's done. That seller's gone, and now the stock's going to probably have a little bit of relief pop because that seller's out. But the block trades are like so many different ones happening now, and it's not happening on exchange. A lot of them are off exchange. It could be a liquid net cross. There could be so many different things. So I don't give as much relevance as I did to them 20 years ago. I'm wondering if you still use block trades, and how do you use them if you do?
So look, if you go all the way back to the days of the 80s and 90s and early 2000s, when market makers and the open outcry was actually an active part of our marketplace, then block trades were huge. I mean, I've been a broker for many years, and I was a broker for Cowen for a while. I did convertible arbitrage. And so, as you described, a block trade was literally, you'd have a seller come into a crowd, whether it was news related, whether it was a big piece that was around, people were shopping the piece. And so everyone in the environment knew that something was going on. Every desk would have a meeting every morning. Somebody would have a big piece. They'd shop it around and kind of see where the bodies lie. There was some buy interest. Sometimes if the stock was trading at 50 and the next real significant buy side was at the $45 level, you'd start working the sell side, right? You'd see where, not that you were trying to hurt anybody, but you just sort of had to get to work with the order, and you'd start making sales. And then as the community got focused on, wow, there's a seller around, my interest is at the 45, 46 level. And that communication and that transparency sort of started to happen. Then people's interest got perked up. The market maker wanted to get involved then, right? Those were the days where if you had, you could work a sell order over time, and then on the tag end of it, the prop trader on that desk of a house would say, you know what, we had $1 million to sell, we're down to the last 200, I'm going to take our seller out. And then they'd work out of that, that last 200,000, and you'd see those trades. You'd be able to identify if you were a tape watcher, as you described, and I was one too, and a lot of were. That was a significant thing to see where the volume lied, when the prints went on. That was more in the world of the eighths and quarters. Once we started trading at pennies, and surely when we started trading electronically, with the algorithms and with the handheld computers on the floor, and then with, not as many market makers in the crowd and their actual interaction with the trade. Right now, I believe that 90%, a majority of trades are literally 100, 200 share lots, right?
Yeah.
You don't see those blocks. Look, you're seeing them in SPACs. You're seeing them, there are off-floor blocks that are happening that, whether they're on the third market or they're happening on different exchanges, just to take people out because they, it's a trade, it's a prearranged trade upstairs. There's a big seller. He doesn't really want to come down to the floor. He shops out a buyer and they put up a piece. So surely in the old days, it was a super exciting way to really kind of forensically understand who was there, what they were doing, and when the sell side was sort of getting exhausted and maybe it was time for a pop. In these days, you know what? Maybe people are doing it. We don't do it at all anymore, because if you look at the tape and you look, when I trade on my handheld, and I can hit sales, literally 90% of sales are 100-share lots. You know,
Yeah.
at one point, a block is 1,000 shares or maybe 10,000. But the days of a 250,000 going up, a 1,000,000-share print. I mean, I know there was a, you know, my biggest print was an 8 million share cross. It was actually
Holy. How many shares?
It was an 8 million share cross.
Oh, that's a big. That's crazy.
It was a nice day. I went out to dinner and I went to the homestead and bought a really big lobster at that point. But it was I don't remember. It was one of the ADRs. I think it was Televisa or Petrobras, or one of those stocks. We had been working a big piece. It was overseas, and it was the tag end of a much bigger order. And I had a customer who was trading a lot of these ADRs, and I got the print. And originally, I tried to go into cross the 8 million, and there was a big buyer in the crowd, and he actually broke me up. He was a million. You know, that's the way you had to, in the open outcry world, when you wanted to cross and put up a block of stock, you had to actually bid and offer and then take stock from yourself. And in the eighth and quarter world, if there was someone out there with a big buy order, he was able to block you on your trade, right? And that was kind of a big deal. So, yeah, the days of blocks are the significance of a block is over, unfortunately, Dennis.
Oh, so I agree with you there too, Peter. So talk about your market indicators. You're not looking at blocks as much as you used to. I mean, there's a lot of other different market indicators there. What's your favorite market indicators right now, Peter?
You know what? Look, for me, I mean, I'm sort of super fascinated by the way the S&P moves, right? And so, as you know, I trade IPOs. I trade sort of a pre-market dislocation to where the Dow in New York and the S&P are going to open, and then I do the closing trade, what's called the market on close trade. So for me, you know, we build a spreadsheet from 2 o'clock on. People on the floor are given access to what the imbalances are going to be coming into the close of the market. And while, you know, it posts out at 2 o'clock, we have 378 S&P stocks that trade on the NYSE. The rest are traded on NASDAQ. And so the notional value of those stocks to buy and sell can actually move a market. So for me, that's kind of what I watch. I don't watch any other kind of indicators. But, you know, let's just talk about yesterday for a minute. You know, what an amazing, you know, it's so funny to listen to sort of the chatter, you know, about, first of all, the chatter in the media when there's one down day and suddenly, you know, this rally has been interrupted. The world's coming to an end. We're looking at a recession, all this kind of craziness. And I always say, you know, one day does not make a market. And then you've got the technicals, Dennis, and you know how, you know, I'm a big believer in technical analysis and technical support. And we saw that 428 level in the S&P 500 2 or 3 times. We saw it happen on after last Thursday's big sell-off. 428 was a support. There was a nice pop after market close on that up to 431. We retested it again on Friday. Then we saw a huge rally, and we saw it again yesterday. Right? You saw this market get down to that 428 level. And, you know, David Green, my partner, always talks about the first time the market hits the technical support level is its most significant power. And the next 2 times it happens, it may break through. And we did see that a little bit. But yesterday was a classic, amazing reversal.
Yeah.
Obviously, it was fueled by McConnell's comments. The market had reversed, though, before that pop, right, which happened just before 2 o'clock. We had seen the levels get down to 428. We saw a little bit of a double bottom there, and the market then did reverse before the McConnell statement, right? So the market was starting to churn. It was a little bit of that fresh new October money coming in, you know, and then, of course, the statement was, you know, which has been on everybody's mind, even though I'm kind of baffled that up until yesterday we didn't see more of a sell-off in anticipation of a potential default, although we've seen this bit of news year after year after year, and I don't know if it's actually ever defaulted. I think we saw once a short-term one, but, you know, it's kind of that political posturing in any ways. But yesterday was the day where people were waiting for that news to happen. It did happen. The S&P reversed, the market rallied, and it ended up closing at the high of the day. So it was a beautiful reverse. It was a 600-point S&P reversal. At one point, we were down 50 handles in the spiders.
Yeah.
And we ended up closing up 10. It was spectacular.
And then we tack on 40 more points here, 40 more S&P points here overnight. What do you do now? Like I was saying before you came on the show, we kind of just quietly had a 50% retracement of the whole overall ugly September. If you look at SPY, we go from 454 down to 426. And, now we just tacked on half of that in one day up to 440. So what do you do now?
You know what? These moves are spectacular. Obviously, I'm more concerned. It's beautiful to watch when we sort of ratchet down. It's sort of healthy. It's a healthy pullback, right? You guys do know technical analysis really well. I love listening to you two talk. And so you know that in a trend trade, you guys were discussing it a couple of times, that as a stock marches higher, you really, in order to really get a good buy signal, you want to wait for that pullback, right? You don't want to just jump on board. And so when a market ratchets down like this and then sees this huge rally up, it's a little bit concerning. Now, is there a fear? There's going to be a fear of missing out trade. There's going to be some short covering for people who, followed the doomsday report after one or two down days. Or are we are we going to sort of do a little work at this level before we either go higher or lower? All they did do with the McConnell statement yesterday was kick the ball down the road, right? We don't have any ratification of what's going to happen. I'm a firm believer that there will have, at the witching hour, a deal will be made, right? And so I think the market's going to have to churn here right now. From a short-term perspective, you got to look at the technicals. From a long-term perspective, I think there's what yesterday and today has shown us is there's still a huge appetite in this market, right? There are people who are sitting around at this level with shopping lists. And I know you guys are traders, right? I hear you all the time, Dennis. You're waiting. Sometimes these stocks get super frothy. When the SPYs were up at 454, a lot of these stocks, you didn't need to jump on board with them. You would either rather buy them higher when they broke through a level or wait till they come in and consolidate a little bit. So I think we need to churn and burn for a little bit here and see what the next little, bit of news is. Beginning of November, we have the Fed, right? We're not sure if we'll hear anything further, before the December deadline now on the debt ceiling problem. So there's so much on the table. It is the last quarter. October is a rough year, a rough season. We do always have that weird psychology about, Black Monday and the crash of 87, and which I lived through, and that was an extraordinary day. I have really quite amazing memories of that. I actually recently got met with a guy who I worked with in 87 on the floor. He came to visit. He's moved on out of the biz, but he came down to the floor 2 days ago. I hadn't seen him since 87. And Wow. It was fun just sort of to talk about what it was like. He had not seen the floor since then. And, that was a different time. That was an extraordinary day. Probably one of the most amazing trading days of all time.
I think we lost Mitch, but Peter.
I'm back.
Oh no, there he is. Mitch is hiding in the background. I don't know where Mitch.
I took a little sip of coffee because I needed some juice. I didn't feel the energy that I was getting from Peter, so I need to have that. I need to channel my inner Peter.
Peter brings the energy. We'll tell you that.
Yes.
I don't need any coffee when I listen to Peter.
I'm 3 espressos in, guys. It's all good.
You're beating me, man. You're beating me. I'll tell you that. And one thing that I'm looking at is going into the next year, of course, there's talk of inflation and when we finally will get interest to rise, if we do get it, maybe a quarter of a point, maybe half. I don't know if we're going to get to that level. But what are you looking going into 2022? How is the long-term outlook going into next year?
You know what? Look, I think there's no playbook for this recovery yet, right? There's no way this is unlike anything else. We still do have a lot of unknowns around the virus and the reopening story, although some of those names are starting to get a little pop. But it's a little bit skittish because that story can turn around on a dime, right? We get one surge of the virus coming into flu season here, and that whole airline, cruise line story tends to go a little bit, south for the moment. The Federal Reserve was, in their inimitable way to give you both sides of the story in one press conference to literally confuse the whole investment community, right? They can go one way and then they go another. And you always watch those Fed days. They're amazing because the market just goes all over the place as people try and interpret what they're talking about. I think the market can handle anything It's going to be able to handle the inflation story, thanks to a number of different things. We were able to handle the pandemic story, and I think we'll be able to handle the bump up in the interest rates. It's amazing how the resiliency of the market, the equilibrium that is achieved every time we run into a crisis, every time we run into a movement in the interest rates. The market can handle all that stuff as long as it has a little bit of a runway into the decision. But right now, look, I really kind of feel like we're a slingshot about to be just let loose here. There's so many new people in this market. There's this whole wonderful new generation of traders in the market. I hope they all go out there and get educated in technical analysis so they don't get hurt. I think that they are going to raise rates in 2022. The recovery story is going to be a good one. Now, look, this inflation thing is fascinating. The supply chain interruption, which was absolutely caused by the pandemic, but necessary for some of these companies and some of these commodity companies to be able to sustain themselves through that thing, it's going to lead us to higher, and the relationship with the labor force, right? It's kind of I'm still amazed. I would love to know what your guys think about this. The fact is, look, I did a piece on Fox the other day with Neil Cavuto, and we talked about there are apparently a huge demand. So trucking, right, is a huge problem. Trucking and shipping, the logistics of that, right? We've got ships on both coasts full of stuff trying to get to the heartland with nobody to drive the trucks to deliver all these things. There's that fear of how people are going to get through the holiday season. Are people going to get their products or not? And it's amazing to me that there's suddenly a shortage of 100,000 truckers. So did we have this problem before the pandemic? Did these people just leave the labor force? Where is everybody, right? Why are we having this incredible obstacle? You're seeing it in hospitality. There's a shortage of people in the hospitality industry, in the trucking industry, in the shipping industry. Where did everybody go? Are they still at home and anxious not to go back to work? Did they leave the labor force? Did they make enough money trading Dogecoin that they never want to work again? Where is everybody?
I think you and I are asking that same question. I think everyone's asking that question because there doesn't seem to be an exact answer. You can blame it on the pandemic, but at the end of the day, like you said, where was this before the pandemic? Was there an issue before? It didn't seem like there was, and now it's definitely present.
I think just, the human nature to a certain extent has changed. I mean, you have people more focused on family now and the important things in life. It gave us all perspective because, even though it looks like, we're coming through it not bad, I mean, it gives you perspective that, hey, the world is fragile. It's a fragile place. And, we got lucky that, the death rate on COVID obviously wasn't a lot higher, because at first we didn't know what we were dealing with. Some people were projecting this could, be as much as a high as a 5 or 10% death rate. Ended up being only fractions of a percent, lucky for us. But it gave everyone perspective on like the important things in life. And people were like, I don't want to go to my 9 to 5 job and get $15 an hour. And then you have the whole inflation aspect of it too. And people are saying, why am I going working for $15-20 an hour when it's costing more to live every day too? So I think just priorities of people have changed.
But how are they supporting their families, Dennis?
I don't know.
That's the question, right? I mean,
my question.
Bills need to be paid.
I get the anxiety about going back to work. I get the fact that we've been sheltered in place and it's kind of hard to get out that door. I see it at the stock exchange. Everybody's not coming back yet, and I understand that. Look, the anxiety around it and all that makes sense. But at the end of the day, people who were supporting their family back then, they surely did not make enough money on stimulus checks to support their family for the next 2 years.
Yeah,
right?
It doesn't make
there
sense.
were thousands and thousands of truckers. Now I'm hearing that out there willing to give $15,000 signing bonuses, that they're bumping up the price people are willing to pay for those workers. And we're seeing it globally. We're seeing it surely domestically in all different industries. Yet, I understand what you're saying. Sure, we do have a new perspective about fragility, about life, about family. But at the end of the day, everyone needs to pay to support their family. So I'm kind of baffled by that story.
Hey, we'll definitely pay attention to that. Peter Tuchman from Wall Street Global Trading Academy just threw up the link in the chat. So if you guys want to check out a little bit more about Peter, definitely go ahead and do so. You mentioned trucking stocks, so you did get a question in the chat. What kind of trucking stocks would you look at? I'll call out two. You maybe could call out one. USAK, that's USA Trucking, and then Ryder R is one that definitely stands out to me. Is there any that stands out to you, Peter, at least that you know of for trucking stocks?
I actually can't really talk to any particular stock. I just think it's fascinating that people should start to watch the different industries that benefited, that were able to adapt to the pandemic story and to the shelter in place, and now the reopening story, right? I think people need to be, look at it from a technical point of view, because as I said, this story can change on a dime. We are seeing a nice rally yesterday in tech. We did see a nice recovery story where, while retail did not participate, we did see a beautiful rise in the cruise lines and in the airline stocks. So there are certain sectors that are going to just blow up if we really start to reopen and the recovery story is healthy. But there are stocks whole sectors that can surely change on a dime, right? Depending on how this recovery story unfolds.
Well, thank you for joining us, Peter Tuchman, on Pre-Market Prep. And like always, the story is everything. We talk about the story all the time here. So thank you for bringing that to us, Peter.
And price action. Dennis always talks about it. Price action, right?
Price don't lie.
Price action does not lie, guys. Please go check out technical analysis, whether you learn it from me and David Green or not, Wall Street Global Trading Academy or whatever. But the bottom line is, guys, for this market is crowded. The market is volatile, right? And the market can change on a dime. Some of these stocks have these vacuums on the way up and down, as we've seen in the S&P, the meme names, and the drug stocks and whatever you're looking at. So, guys, look, nobody got broke taking a profit. Don't turn a winning trade into a losing trade, guys, and good luck.
Thank you.
Good tips. Thanks, Peter.
All right, guys, we're almost to the 9 o'clock time. We're going to get you guys to all access stocks. We got some great stocks. We're going to get into some presentation. I can't wait to see RC Moto. That's really the one that I'm going to be looking forward to look for the presentation. What are you looking forward to on your day today, Dennis? And also, I heard there's an event on the 16th. Is that true?
There is an educational event we're running over at premarketprep.com. October 16th, we're going to be talking all kinds of different market neutral strategies. We've got Rob Friesen, who's the president of Bright Trading. Obviously, Joel's going to be talking technicals. I'm going to be talking risk arbitrage. I'm going to be talking pairs trading. I'm going to be talking sympathy trading. I'm even going to talk social media stocks. So please join us October 16th. If you're interested, go to premarketprep.com. You'll see the banner for the educational event.
All right, guys, this is probably going to do it for Dennis. I'll let him go get on out of here, go handle the trading day, and do what he does best. Go get those pairs on, man. We'll see what happens. Have a good day. All right, guys, that's going to do it for us on Pre-Market Prep. But like always, guys, we always get to the information that you guys want, so stay tuned. We got all access coming up. This is going to bring a lot of stocks to the light. I'm going to go through quickly, give you guys some of those stocks that are going to be there. You got, of course, RC Moto, I already talked about. You also got Citrus Pharmaceuticals, Biotrocity, you got Wrap Technologies. Stay tuned, guys. 22nd Century Group Inc., Verb Technology. There's going to be a lot on there that you guys can learn from. And like always, get the information that you need to be an informed trader out there. And also, like you see right here, meet the top cannabis stocks in the 2-day hybrid event, October 14th and 15th, right out of New York City. I'm going to leave that video and get you right over to all access. Like always, guys, stay tuned. We got so much for you guys all day long. We're going to be going through it. And like always, hit that like, hit the subscribe, and we'll see you next time. And check out New York. Who's in New York? I want to see you at the cannabis event. We'll see you there.